Let's go now to our friend Beimnet Abebe from Galaxy Trading. As always, Beimnet, welcome to Galaxy Brains.
Thanks for having me.
So kind of a quiet time. I mean, you had the Bitcoin halving, which had a big impact on the network. The network obviously becoming, the monetary asset becoming scarcer, but fees spiking because of runes and ordinals and stuff. But we're going to talk with Brian Wright from Galaxy Mining in a minute about that. But otherwise, though, like BTC, like kind of sideways. What equities like have been down, but kind of like sideways at the moment. Like it's sort of.
Yeah, they've been down for a couple weeks.
We waiting for a new catalyst, or
yes?
Yeah. What are we waiting on?
Well, earnings.
Yeah.
So I think this week about 160 companies in the S&P 500 report earnings, including some big tech names.
Yeah.
And so that will broadly give the market a sense of how healthy the economy is. In terms of are people spending money, how healthy corporate balance sheets are. So it's I know broadly impact risk sentiment.
Yeah.
If people start feeling good about stocks again, that should be good for crypto. That should be bad for the dollar. Et cetera, et cetera. So it's really important to pay attention to these earnings. I pay closest attention to the consumer discretionary companies that have a bigger kind of a stronger pulse on where the U.S. consumer is.
Mm-hmm.
Also credit card companies as well. One interesting tidbit, one of the lower quality credit card companies recently reported earnings, and they had their provisions for loan losses start to tick higher. And it was back to levels like that you saw in like 2008 and like around the financial crisis. We're talking about like a provisioning of slightly over like 5%.
So wait, setting aside capital to cover those losses? Is that what that means? Yeah.
And like the delinquency rates are
so they set aside more as they expect more losses, basically. So you're saying what the consumer is now stretched and they don't have extra cash anymore. They're in debt.
Yes.
Yeah.
And the debt is at a higher cost than ever because interest rates have gone up. Savings have come down a lot because far less transfer payments from the government. It's also wages have not kept up with inflation. And so it's a constant burn on people. And more people are getting stuck in like the debt trap and just spending more money than they're bringing in. And so you are starting to see cracks in that economy, in the, everyday person, I would say. And then the other thing to pay attention to, I think, from this earnings season is the ability of corporates to respond to increasing costs by raising prices. So, over the past couple of years, you've seen a lot of consumer staple companies, your big conglomerate types, be able to pass through the increased cost of commodities, labor, and other services to the consumer. But that was because the consumer was in a much healthier spot, and so they could absorb that. But now, if you're continuing to see some of those costs go up, right, and there's less of an ability of those corporates to pass through that pricing to consumers, where's it going to have to come from? It's going to have to come from their bottom line.
Yep.
And so you're going to see margin compression as the consumer kind of tightens up. And then obviously, consumption's like 70% of the U.S. economy, and so, like.
Are people consuming
and what are they telling you about what they're likely to consume going forward? These corporates are so good and so precise at forecasting every bit of foot traffic in their stores, every bit of sales, etc. And so when they speak, you got to listen. And generally, earnings season's a great time to kind of step back and be like, what's going on?
Yeah. So a number of interesting things that I'm hearing from you here and reasons why earnings matter. One, obviously, that you mentioned at the top was it can help people become bullish on stocks. Like that can sort of change the whole attitude and the risk sentiment in the country in terms of on the investor side, which can impact things like crypto and the dollar and whatnot. But also that you're reading through some of these earnings, like looking through them to help understand, engage the consumer's health.
Yes.
Overall, which obviously has an impact later on inflation and whatnot, right? If they're all spending a ton, then inflation could be stickier.
And it's also like, are they laying off people?
Right. That impacts the employment situation, which is one of the Fed's mandates, right? So very interesting. And then I wanted to ask you too, when we think about like, how does this, I guess, so no Fed speak? No, we're talking about on the macro data side
right now. Yep.
So what does that mean? That as they lead into the FOMC or something, they can't talk?
Correct.
Yeah.
And right now, like, even if they were talking, like, it's just a bunch of noise. All of them come out, and like there's a
You
gazillion
wait.
speakers every day.
Yeah.
And it's like, I get the message. Like, data's been hot.
Yeah.
You're less likely to cut.
Yeah.
Like, you're telling me it in 15 different ways.
And
every governor,
to be clear, you've been
like, wants
pointing
to
this
come
out
and
for
speak.
several months that like they would probably get here, and that well, actually, what you weren't sure whether they would get here. You were saying they absolutely should get here and not cut because the economy was
It's
hot.
fine.
Yeah. But now it seems consensus. I mean, obviously the futures markets on rates are basically pricing in barely any cuts, like one cut, maybe one or two
and a
cuts.
half.
Yeah.
Something, yeah.
Down from what, like 7 cuts?
Yes,
In
to start-
January, they
yeah.
thought we were going to have 7 cuts.
Which was insane. But I mean, if you really think about it, like, I think your 1-year inflation rates are like, the average like high 3s. Your 6-month stuff is now looking at like, probably like probably still high 3s, mid high 3s. But now your like 3-month run rate of the past like couple of inflation prints is like mid 4s.
Yeah.
And so like it doesn't seem like you're anywhere close to your inflation target.
Yeah.
And the one thing I would highlight as well is that, market expectations for inflation are, pretty important. And I think that's what you have to monitor the most, because if inflation just keeps continuing, these expectations are just going to like start to break out. And then people are going to be like, they're going to doubt the Fed's ability to actually achieve their mandate.
And that'll make
they're
it even
gonna
go
lose,
higher.
yeah, and they're going to lose some credibility and stuff.
Right.
But I just don't know how much more inflation people can really put up with. Because as we've talked before on the past episodes, like, you are getting taxed because of inflation. People are going to end up spending less on, tons of activities if their essentials are costing them way more.
And they are. I mean, we all see this. I have a family. We go and buy groceries. Some single people in New York may not go to the supermarket very often, but we do. And it's been getting more expensive for years at this point. Also, looking at things like electricity cost is going up, like gasoline, obviously. But, the gas, we don't drive too much. I mean, it's been kind of expensive from, I don't know, maybe I'm old. I remember when it was like $1 a gallon. So pretty much anything over like 2 seems kind of expensive to me, but it's been up. But really the one I looked at recently was the electricity bill. I was like, unfortunately I don't live in Texas where you have a much freer market on electricity and they have a bunch of renewables. I live in one of these many parts of the country where the grid is controlled by one operator with totally opaque pricing. Yeah, which is how most of the country's electricity. But it's we're talking a fair amount, and we haven't even come into those summer months with like
summer,
where it gets really hot. So they're hurting, and also. You see these videos on TikTok. I'm not on there, but they get posted on X, right? And people are hurting. They're talking about it a lot. A lot of videos of people being like, how, and by the way, some of these people coming around to the, wait a second, why can't we just print more money kind of question?
Oh, yeah.
Which is getting pretty interesting.
Yeah.
TikTok set to be banned in the United States. The president just signed a bill that forces the sale of it or bans it. Just as another aside here about the economy. It does seem like the consumer... The average everyday consumer, you can even call them the voter, is in a lot worse shape than people.
And it's not getting any better.
Right, it's actually getting worse.
And
still.
I don't think it will get that much better.
I know.
There are no magical solutions to this stuff. Like, the government's not going to stop printing money.
In fact, they're printing more.
They're printing more money.
So, like record issuance, right?
And and it's just like, it comes down to like the wealth inequality stuff,
Yeah.
right? Like, rich people can keep their assets, their savings and assets that are more resilient to inflation.
They even appreciate.
Appreciate even further, right? And so the people that own homes right now, right, as housing keeps going up, they're protected against inflation because they rent to people, and as rents go up, they'll raise their rents and they'll keep up with the inflation, right? And like, that's what people spend a lot of their money on is housing and stuff. And so, and then if you don't own these assets, and like if you want to hedge against inflation, gold, silver, like those things are already trading super well at the dead highs. And like, if you really want to keep up, you got to have big positions in them. And so it's like, it's just so bad.
Yeah.
And I think, like, which is crazy, but like, part of the reason why social media exists is to keep people like in a malaise so that they don't focus on this stuff. But so the government probably does need TikTok. They just don't know it.
Yeah, I mean, I think right now it's working against them, or they think. I mean, I don't know exactly why. Don't get me wrong, I have no idea. But it does seem like it is a powerful tool for ByteDance to impact, like a Chinese company to impact America. But again, people, I've seen videos, they are furious about this. They view it as a free speech issue. This is, I thought, a free market. It's that's very strange, but a lot of content on there about the average, like from people all across the country saying they can't afford basic staples, that they're working 2-3 jobs. And, I also think about that employment number, right?
Oh,
like
it's such a crazy
lot
number.
of that employment is part-time employment.
But it's also, the numbers are wrong. They're statistically,
And they do, don't
insane.
they update the numbers like every time?
They
They're like
revise-
way off all the time.
Well, yes.
Yeah.
But I'll give you an example. This is the one that's really been trending recently. Is we're a nation of 330 million people. I don't know. Maybe the labor force is like 130 million people of that, or maybe a bit higher than that. But initial jobless claims every week are $210,000. 210,000 people.
Same number.
Same number. It doesn't make sense for a population and a sample size that big.
Yeah.
That the variability is that low.
Right.
Like, it's insane to me. And it was crazy when the job market was really hot. Every single month got job revisions higher. There's a huge spread between, the household survey and like the employer survey. Like, there's so many weird statistical anomalies in this data. It's like, it's hard not to, like, not saying you need to be a conspiracy theorist.
Yeah.
But
you have to wonder.
You have to question this stuff.
Yeah.
Like, even if I'm a Fed official, like, I'm going down to the people taking the surveys.
You're like the guy in The Big Short, right? Steve Carell's character, he's flying down and looking at it because, like, the data didn't make sense.
The data didn't make sense.
This is what I'm saying about the TikTok videos is like, look, you've got data on one hand, but then you just, like, hear from the people that it is bad. I mean, so I don't know. It's a very tough thing. Anyway, it seems like we're a little bit of holding pattern. We got to let earnings play out. We've got to, I posted this on Monday or on Tuesday that it was the lowest day it was the 7th
ETF
lowest
volumes.
day ever in Bitcoin ETF volumes. Actually quite close to the lowest, but there were some in February that were, so just people like crab market, people trying to just wait and see basically.
No, honestly,
we don't have Fed for several more weeks.
So yeah, here's the thing. I love Bitcoin. Think it's a great long-term holding. But has it lost a little bit of its short-term momentum? Probably. And you can see that reflected in, the volumes.
Yeah.
In addition, like, you had the halving, you had the ETF, right? A lot of the big narratives for crypto have played out.
Right. Yeah.
To be frank.
That's right.
And so, a lot of times markets need catalysts.
Yeah.
And markets need, and like, especially in such a speculative asset like Bitcoin, people like to see good momentum to continue to participate.
Right.
And so, to the hardcore Bitcoiners, this is just noise.
It might even be good.
This is just like path to accumulation.
I have plenty of people who are like, this is great. We can stack here.
You can stack. Everybody that's like in the Bitcoin game is like, I need more time to get more Bitcoin.
Right.
And like, I got to have more.
But it's obvious. I mean, if you look at the ETF flows as one version, like you can just see like huge run in February and March. And then April's been kind of like basically almost more anemic every day. I think we might have decided that we bottomed. I think last week, we had, I think, basically the lowest total inflow ever. The lowest for the biggest ETFs inflow, right? So I think we maybe have bottomed, but remember too, on that flows story with the ETF, we haven't had these wealth management platforms and stuff turn on at all yet. Our entire analysis was 14 billion in year one takes us to 75K in price, all from a small percentage of these wealth management platforms. Well, we had 13 and it brought us to 738, and none of those platforms had turned on yet. So presumably there is more demand side to unlock.
No, absolutely.
But I agree. It feels, we're sort of just chilling.
but like that's really what you need for the long-term thesis is just more access.
I want multiples every month.
No.
Remember when it was 16.5? I was sitting right in this seat.
Yeah.
A year and a half ago, a year and a quarter ago.
Brutal times.
Well,
Jesus.
We'll keep watching and we will let you know. There it is, my friend, Beimnet Abebe from Galaxy Trading.
Thanks for having me.